Hey there, welcome to this video. My name is Omkar Singh and today we are going to learn about fair value gaps, an ICT concept which lots of people are using in their trading strategy, something that I am using in my strategy to get 95% win rate, right? There's lots of people using it. It is created by ICT. If you don't know, you can learn more about him by just searching about him. Okay, nice guy. So, fair value gap is also known as FVG in the short form, right? So it's a three candle structure. Let me just quickly show you how you can use it as a strategy. So I have a different video explaining why the fair value gap works the way it does. Okay, I will add the link to that video below in the description if you wanted to learn more about why uh, fair value gaps are working the way they're working. Okay. So let me just quickly show you what this structure is and what we are looking for. Okay, so let's say we have three candles here. Okay, and let me just quickly pick it up here, and these are the wicks of the candle. Okay, so let's just assume these are the three candles. Okay, and we need to have a three candle to see the fair value gaps. Now what you have to do, you have to mark the gap between the first and the third candle. Okay, so usually the second candle is the place where you will find the gap. Okay, so what you have to do, you have to first go to the tip of the wick of the first candle. Okay, this is the example where the market direction is upward. Okay, direction is upward. So this is the first candle, second candle, third candle. You have to mark the tip of the wick of the first candle. Okay, and drag it up to the tip of the wick of the third candle. Okay, you can see right here, this is the tip of the wick of the third candle, and this is the tip of the wick of the first candle. Okay, you can see this gap here. Let me just quickly change its color to yellow here so you can find this. You can see this. Okay, let's just call it FVG, fair value gap. Okay, so how we use it as a strategy. So most people, what they do is that when market is in upward is bullish, okay, and they see this fair value gap, what they do, they wait for the market to come back to this fair value gap. Okay, because the market needs some liquidity to go continue be a bullish. Okay, so they come back to this imbalance, and market takes the liquidity, and then it continues to be bullish again. Okay, so what people usually do is that whenever they see, they wait for the market to come to the FVG, and as soon as they get some signal, when market breaks out of the fair value gap again, they take their trade. Okay, they put their stop loss below the fair value gap and target, let's just say 2x, 1:2. Okay, and they target according to their risk management. Okay, so whatever their risk management is, they do that here. And for this example, let's just say we are doing 1:2. Okay, so our trade will be here. Also lots of people take it from inside. Okay, inside the fair value gap, they put pending orders there and they wait for it. But when I used it, I usually do that. Okay, so this is the bullish structure. Okay, let me just quickly show you what is the bearish structure of a fair value gap. So bearish FVG structure, these are the three candles. This is the first candle, the second candle, the third candle. Again, we are going to do the same thing. We are going to mark the tip of the wick of the first candle. Okay, and stretch it to the tip of the wick of the third candle. Okay, so the gap here is the fair value, bearish fair value gap structure. Okay, so let me just quickly change its color. Okay, so this is the fair value gap here, G. So market currently, so how people use it in their trading strategy? Again, market is in the bearish, it's a bearish market, okay, and it has created this fair value gap. So the market will, what traders will do, they will wait for the market to come back to the fair value gap and get rejected from here. Okay, after getting rejected, most probably the market will continue to be the bearish. Okay, so they will wait for the fair value gap rejection. Okay, and as soon as the fair value gap rejected, they will take the entry here. They will put their stop loss below, above the fair value gap or above the second candle's wick. It just depends on the trader and their risk management. Okay, and they will target for profit according to their, again, risk management. Okay, for us, we will target 1:2. That's it. That's what you want, right? That's enough. So this is the bearish structure of FVG. This is the bullish fair value gap structure. Let me just quickly show you a few examples in the market. Okay, so currently I'm in the 5-minute chart of the gold. Okay, so you can see, let me just quickly show you a bearish example here. I'm not using replace because I wanted to I'm not using bar replies, just wanted to show you quickly how you can see the fair value gap. So this is one of the example, a bearish fair value gap example. You can see these candles. This is the first candle, second candle, and third candle. It has created a fair value gap here. Okay, this candle doesn't have wick, so we will take the top, and again the third candle also doesn't have wick, so we will take its bottom. Okay, and again we will take our trade from here. We will mark, let's just say here, okay, and it will be around 1:1.5. okay, and there are a few other examples if I can find for you. One is here. Okay, this is the first candle, second candle, and this is the third candle. We will mark them. Okay, you can see that market came out, created this, market is bearish, okay, and it has created the third candle, and after that it came back to this fair value gap area and came down. So what you can do, you can take the short here from this candle. Okay, and also take the note that you always have to wait for the candle to close above or below the fair value gap. Okay, if candle doesn't close below this fair value gap, I will not going to take the trade. Okay, you will find that sometimes market will come down and will create a wick and go back to the fair value gap. So always wait for the candle close here. Okay, so I will put the stop loss above the fair value gap and target, my target is usually 1.5 to 2. So if I will target 2 here, 1:2, it will be successful trade. Okay, so these are the bearish examples. Let me quickly show you some bullish examples. Okay, so for bullish example, I have found something here. Let me just quickly show you. So you can see that these are the 3 candles, 1, 2, and 3. We have a fair value gap here. Okay, from the first candle's end to the third candle's wick here, because we don't have a wick for the first candle, so we will take the peak of the candle. Okay, so this is the fair value gap. Again, we will wait for the market to come back to the fair value gap and as soon as the fair value gap rejects and market close above the fair value gap, we'll take our trade. We'll put our stop loss below the fair value gap, and we will target, what I usually target is 1:2. Okay, and I always do that because it increases my win rate. Okay, so this is the bullish example. There's one more bullish example. If I continue to trade, let's say I have taken the profit here, but I saw that there's one more fair value gap here. This is the first candle, second candle, third candle. We were going to mark the tip of the wick of the first candle. Okay, and we will drag it up to the third candle's tip of the wick. Okay, you can see this is the fair value gap. Market gone above the fair value gap, it came back to the fair value gap. Okay, and as soon as it got rejected, let's say it first got rejected here. Okay, and I took the trade here, put my stop loss below the fair value gap, targeted 1:2. Okay, something like that. So you can see the market fluctuated a little bit, but end up hitting my drop, take profit, right? So this is the fair value, guys, fair value gap, guys, and the way I've showed you the strategy, it works. It's nice strategy. I've seen around 55 to 60% win rate on that, but this is how the most of the traders use fair value gap. Okay, but me, if you talk about me, I do something else. Okay, I actually wait for the disrespect of the fair value gap. It's called inverse fair value gap. Okay, IFVG. Okay, so if you are interested in learning about IFVG and how I use fair value gap, I use the disrespect of fair value gap, okay, to get 95% win rate in my trading strategy, make sure you click on the link in the description, okay, or somewhere else about, or check my channel. You will find lots of IFVG videos. Okay, I'm going to create a lot in the future also. So this is for you. This is the fair value gap for you guys. If you like this video, please like this video and subscribe to this channel to learn more about ICT and how you can be just a profitable trader here, okay, on the internet. So my name is Omkar Singh signing out. See you on the another one. Take care.